Lululemon officially joining the S&P 500 index today, replacing game maker Activision after recently finalizing its merger with Microsoft. Now, this comes more than 15 years after the athleisure retail company made its public debut. Yahoo Finance reporter Brooke DiPalma is here to discuss how Lululemon got here, one stretchy pant at a time, I guess.
That's right, Rochelle. One stretchy pants at a time, of course, evolving so much from being a leggings brand to now an athleisure powerhouse. When you think of this company, you can't help but think of its signature leggings that kicked off back in the 90s to today, known for so much more, like those belt bags most recently. But the company has had some hiccups in the way. Compared to a decade ago, in 2013, the company was known for something much different. Back in 2013 is when Lululemon recalled about 17% of its black yoga pants for apparently being too sheer. Now, that cost the company roughly $60 million in lost sales at the time. And then following that, founder Chip Wilson had said some pretty offensive comments that some women's bodies don't work for the pants. He then resigned in December of 2013, and Lululemon's share price dropped by roughly a quarter in 2014. And following that, the company faced yet another leadership scandal before current CEO Calvin McDonald took the helm in 2018. And since 2018, despite all this noise and all these changes, they were really able to hit a stride and pick up momentum. And one analyst calling it incredibly successful as it defied all the pressures on retailers. And ways that they were able to do that is by investing in digital sales. We also saw them double down on menswear, as well as invest in other what they call play categories like tennis, golf, and hiking. And it's important to note now that you're seeing this momentum build up. You're seeing them join the S&P 500 at a time where in the last year, shares are up nearly 40%, despite consumers feeling the pinch of inflation. And one analyst telling me from a long-term perspective, this is a sustainable growth story. And so it'll be very interesting to watch just where Lululemon goes from here.
Brooke, you just highlighted some of the products that have really helped drive this stock higher, but Lululemon's always been about sort of this lifestyle brand, right? Selling an image, selling a lifestyle. What are the other growth drivers you think the brand can lean on moving forward?
Yeah, Kiko. Well, analysts really weighing in on three key growth drivers here. And as you noted, the brand has always really been this lifestyle athleisure wear, but most recently with the rise of athleisure wear, Lululemon really winning here. Analysts saying mostly that now, and we know this as well, it's perfectly normal to wear leggings to things like work and school, and Lululemon stepping perfectly into that. The company also investing in non-athletic wear like those belt bags, which are then picking up as a trend among multi-generations. That really brings me to my next point, is his ability to be a selling point for both men and women, as well as multi-generations. As I said before, they introduced men's casual pants back in 2014, but since then, they wanted to double down to drive growth there. And Lululemon remains a key brand among upper income teens, according to the recent Piper Sandler survey, alongside its core customer base of 35 to 55-year-olds. And another key driver that's important to watch here is while they didn't do so well in their launch in Europe, many analysts banking on this launch in China. The company aims to quadruple its revenue, international revenue, and make China its #2 market. And it is important to note that this all comes as that consumer's wallet does remain pinched, but many believing that their higher income audience are willing to pay that premium price for their yoga pants.
Okay, we'll be watching if that continues. Brooke DiPalma putting it all together for us. Thanks so much.